Hello everyone, today is September 17th and this is a second session of the Wyckoff Trading Practicum course. I thought we had a really good start last week, so let's just, keep up this same intensity. We're going to do a lot of stuff today, so I'm not going to spend a lot of time on administrative stuff. The only thing that I want to mention is thank you for sending the files in the correct way. One file, all of the charts in there, and that's usually the PDF or power charting file. So those work very nicely, and thank you for putting the name of the class into the title right away. It's being sorted out for me, and then it's just easier for me to go through those. I did look at all of the homeworks that were sent, and just tremendous job. So there is a big difference between this class and the Monday class in the way how people analyze. So you guys obviously are much more advanced and knowing all of these concepts, so it shows in your analysis. For the announcements, WMD promotion for those of you who are not attending the Wednesday class, you don't even have to attend. You could just watch the recording whenever you want. We're going to do 3 sessions for $30 for those of you who are new subscribers on September 25th, October 2nd, and 9th. Check this out. October special, I'm extremely excited. Together with John Colucci, we're going to talk about scanning for Wyckoff candidates, but in such a way that we would be looking for specific structural spots. So this is the next step in the evolution of the selection process. So we definitely are going to bring a lot of examples. John is going to show a lot of his scans. I'm going to be talking about specific characteristics of the spots that we are looking for. Together we will post-analyze the results of the candidates that we receive. So highly recommend, especially at this level. At your level, you should be extremely interested in something like this. Today's session, we're going to finish the conversation that we started in WTC on the significant bar analysis. That's kind of like the main theoretical emphasis today. I don't recall exactly to which point we've talked about this. I think it was at the very rudimentary level, so we have to come back and we can't really move forward without this knowledge. But we're going to start with something else. We're going to start with an array of things. The first thing that we're going to do is one of our students who has been with us for years and years, Franz, he has decided, and let me see, let me find Franz. Okay, hold on a second. Here you go. So he had decided to start publishing a blog on Wyckoff Analytics. And by the way, and especially again for this group, if some of you are interested, maybe writing a piece expressing yourself on the knowledge of Wyckoff or what you're going through in your trading, and you really have to read Francis' blog because he goes through his trades, analyzes mistakes, and we need all of us to do that, exactly that. So at least when you read his blog, what happens, at least to me, is I would say, okay, I remember I made this mistake, the same mistake. Yeah, so what was kind of like the cause of that mistake? And as you read Francis' blog, you are going through that analysis yourself. So in a way, you're encompassing some of the, better practices in those type of the situations. So we're going to have the market update from him. Then we're going to come back to our articles on outliers and mundanity of excellence. We'll quickly talk about that. We'll check out our bias game. We'll jump into the anatomy of a trade. There is a development right there. There is one question that we need to address, and then we will review the significant bar analysis. And, if we are lucky, we'll get to the exercise. All right. Well, Franz, are you there?
I'm here.
Okay, great. Welcome. How you doing?
I'm doing fine. Roman, how are you this evening?
I'm doing well.
I guess it's afternoon in California.
Yes, it's yes, 3 p.m. So before we go into your material, which I thought was very interesting, um, could you tell our students here maybe a little bit about your blog in your own words?
Sure. Um, well, first of all, I got introduced to the Wyckoff method uh, through a chat room that I participate in back in 2016. And kind of following the thread, I ended up at Wyckoff Analytics in the end of 2017. And then I ended up taking, just a little background on myself, I ended up taking the trading course, the trading practicum, and I participate regularly in WMD. So that's a little bit of bringing up to speed on my involvement. And one of the things that's cool about WMD is that Ramon and Bruce started off by saying, welcome Wyckoff Nation, which is what we all are. We're all trying to, learn this particular process. And I'm moving up the learning curve, but I'm just like everybody else. I'm still a student. My blog, I decided about 6 months ago that I really needed to put a trading plan together. And some of that was, I should say more than some of it, a lot of that was from Ramon's prompting. So in the process of doing that, looking at, you're doing your back testing, looking at historical trades that you've done and analyzing them. And I found all sorts of mistakes that I was making. So I thought, well, why don't I really hold myself accountable to, trying to not make so many mistakes by actually, airing them out, putting it out for everybody to see and going through the analysis myself. And hopefully that will cause me to not make the same mistakes as many times in the future. I'm sure I'll continue to make, we all do. But at any rate, that's a little bit of the background on the blog, Ramon.
Okay, well, great. And such a great example, Franz, of what you do. And in the way, I like really the way how you do this. You are helping yourself by writing this, but you're also helping others, which is so wonderful. I kind of see the teaching the same way, so I'm helping myself to get better, but at the same time, I'm giving back to the community. So it's just great to see. Okay, so let's go to your presentation. And as usual, everything is for educational purposes. Stop the video, read the disclaimer. Franz, I don't know, we didn't really communicate on this. Would you like a screen, or I have all of your slides here? What would you like to do?
Why don't we just try putting them up and I'll tell you kind of what the different messages that I'm trying to put across here. Obviously, these are the three major laws that we operate under. And backing up just one step, in putting this trading plan that I've been working on together, the first thing that we do is analyze the overall market. So, and obviously we use the same techniques and tools to do that, but looking at a kind of a shortcut to try to analyze the law of supply and demand as it applies to the market, I came across an indicator that I'm sure other people are familiar with called the Chaikin money flow. And looking at that, I should again back up one step. I do an analysis each week of a whole lot of different ways of just looking at the overall market. And it's about 90 right now, and again, this is for educational purposes, but from my read of things, it's about 98% bullish, just about everything that I look at. But there's one little fly in the ointment, and that is the law of supply and demand, and it goes completely, I know I follow Bruce Fraser, I'm sure many of you other Wyckoff participants do as well, and just Friday, his power charting episode was talking about how P&F charting right now substantiates the bull case. So what I am just saying, there's just a little fly in the ointment as I see it, and it's being generated by this Chaikin money flow indicator. So if you can go to the next slide, what is the Chaikin money flow indicator? Well, Chaikin money flow combines price and volume to show how money may be flowing into or out of a stock or the market. It's an alternative to the accumulation distribution line. And then it goes through how it's calculated, and just very quickly and simplistically, all it does is it looks at the last 20 periods, and it looks at where on each of those bars for the last 20 periods the market closes. And if it closes at the top of the bar, it gets a +1. If it closes at the bottom of the bar, it gets a -1. And if it closes in the middle of the bar, it gets a 0. Then what it does is it takes that reading and multiplies it times the volume for that particular day, for that particular bar, that period. It could be, doesn't have to be a day. It could be, in my case, I'm looking at months actually. But it looks at that, and then it multiplies those two and takes the last 20 readings and sums them, and then every period forward it drops the last one off and adds the next one. So hopefully that makes sense. But basically it's just looking at how volume and price interact in a very simplistic way to define whether there is a lot of demand or whether there's supply or whether we're somewhere in the middle. Does that make sense, Ramon?
Yeah, absolutely. Mm-hmm.
Okay. So next slide, which is actually, this is the Wilshire 5000. And when I look at the market, rather than looking at individual indicators, individual indexes, the first thing I like to look at is just what the overall market's doing. And the Wilshire 5000, it says 500 there, that's a mistype, should be the Wilshire 5000, is pretty much the entire broad stock market. So this looks at the last 20 years of the Wilshire 5000, which is just a great way to get perspective on what the U.S., I know there are other people besides U.S. people involved here, but this is the U.S. market for the last 20 years. And, we talk about consolidations and trading ranges, and we talk about trends. And I think I pretty well identified, starting in the year 2000, at the kind of the tech bubble top there, that was an obvious distribution. There was a redistribution on the way down. So both of those are circled, or not circled, rectangular in red there. Then in 2003, we had an accumulation, and I was reviewing one of the teaching sessions talking about vertical absorption. And if you look at these, particularly the bottom here in 2003 and the bottom in 2009, this is a little bit of an aside, but you can really see vertical absorption coming off the bottom. So that's kind of an interesting thing to be alert to if we do get another, bear market low at some point in the future, which I'm sure we will. So following the 2003 accumulation, we get 2 periods of reaccumulation, and with trending periods in between, which then top out in 2008. And I'm going to come back to the Chaikin above in a second, but I just want to kind of walk through this whole history. Then we get another major downtrend, which ends in 2009. And here we see another accumulation and major league vertical absorption coming out of that. That's just a very powerful didn't give, once it started to move, it didn't give people a whole lot of time to get on. Up until 2010, we had a reaccumulation, another reaccumulation, went to 2015-16, another reaccumulation. These are all associated with events, but it's more just, the market goes from a trending to a non-trending environment. And now, most recently, we're in this consolidation period that started in early 2018, which is the last one. Okay, so now let's go across at the top and look at the behavior of the Chaikin money flow at these different accumulation and distribution periods. And if you can start over there, pretty much line up with that peak in 2000 up there at the top. And notice as the consolidation period moved forward, notice what's happening to money flow. It's gradually, supply is diminishing. You've still got supply. You've still got, anytime you're above the zero line, you've got positive flows, but it's definitely on a downtrend there. And to me, that's just a real simple, easy way of visualizing supply and demand. Once we hit that second distribution area, the redistribution, you can see that money flow actually went negative. And then very interestingly, in the 2003 period, if you'll notice, as we moved through the distribution and into the accumulation in 2003, if you'll just put your pointer there on and line it up with the highs in that accumulation period. So just late 2003, and notice where, and then coming out, and notice what money flow is doing. So suddenly we're making a higher high at each of these higher highs in the price bar. So just a very simple relationship, and it's the same thing. That's right, just going across. Anytime you've got a reaccumulation from the beginning to the end, you've actually got, pretty much invariably, you've got a higher level of Chaikin money flow at the end than you do at the beginning. So once you get into the 2008 distribution, it's the opposite. At the peak, you've got high money flow, and as you progress through, supply is diminishing, and the cumulative money flow is coming down. So by the time you're exiting the distribution period, you're definitely in a significant downtrend in money flow, just as prices as well. So pretty much follow this all the way across, and I won't go through each distribution, but I think it's interesting if you go to the very last now, the current distribution period, or excuse me, reaccumulation period, and notice what money flow is doing now. As we came into this in early 2018, money flow is very, very strong. It's making a peak. But we make a higher high, and look what money flow is doing. And again, and now we're trying to make another higher high, and once more. So this, like I said, this is the one fly in the ointment that I'm seeing, and supply and demand is really one of the probably the most important of the three rules. And to me, even though there's still a significant amount of money flow available, it's heading in the wrong direction for this kind of for this point in a reaccumulation. So that's kind of the long-term picture. Then I kind of zoomed in. So if you go to the next chart. Now we're looking at weekly, and we're just looking at the 2018 to present period. So we're looking at that last reaccumulation period. And you can almost break this down into two. Roman has talked in the past about how sometimes the market goes through kind of different rolling stages where you start off looking like you might be in one kind of bias, and that bias might change as the consolidation continues. So notice there at the beginning, notice what money flow is doing, very high. And then notice the higher high that we made last October, and notice what money flow is doing. Yeah. And very soon thereafter, the bottom fell out. So now we get this rally coming, from December of last year into the high, and money flow is doing what you'd expect it to do. But then we're making another higher high back in July, and now look. So again, something doesn't smell just exactly right to me about this market. And if you go down and look at the actual volume bars down below, yeah, exactly. Very, very high. Is this what's going on here? So go to the next slide, and there's and you'll see my question. And what I've done in this next slide is I've just taken the period from last December, from the low last December into this year, and kind of tried to overlay maybe some phase analysis on it. And the way it looks to me, this is the way I'm seeing it, is we've kind of made it through phase A, and we're now in phase B, but here's what, at least by my interpretation, here's what volume's doing, and here's what money flow is doing. And maybe this will right itself, maybe it'll correct itself, but this is what I'm seeing right now. And it's like I say, all my moving averages, my momentum, my sentiment indicators, everything is bullish except for supply and demand. And it's basically just supply and demand as I'm reading it from this Chaikin money flow indicator. But like I said, something doesn't exactly smell right. So Roman, you're welcome to shoot holes in my theory, but that's what I'm seeing.
All right. Questions. All right. And then, Franz, first of all, are you done?
Yes.
Yes. Okay, great.
Yes.
So let's go through the questions, comments, guys, first, and then I'll give you a little bit of my take on this as well. Question from Simon: should volume be directly proportional to money flow? For example, high volume should have a higher volume money flow area. So as the let me kind of like translate this a little bit. So Simon, as the volume signature increases, you're asking, should the money flow area also increase? So like this area right here. Is that the question? Yes. So Franz?
Well, if you think about the way the money flow indicator is calculated, it's based on where does the market close on each of those bars. So here we're looking at weekly bars. So let's say that first week in August, let's say the bar closed right in the middle, although it didn't. I mean, we could say it closed towards the bottom, but let's say it closed right in the middle. Well, that would give, remember, the range for the indicator for each bar is from +1 to -1. So a close in the middle would be a 0. That then is multiplied times the actual amount of volume. So you could get a reading, even with very high volume, you could get a reading for that period of 0. Now in this case, you've obviously got a close probably in the bottom, 8.8 of the bar or something like that. I can't tell exactly, but you've got a reading towards the low of the bar and a very high volume spike. So how is that going to affect the last 20 days? Well, it's going to, it's going to have a, more than insignificant impact on the overall indicator, if that makes sense. So volume is important, but it's the multiplier of that volume, which is from where the price bar closes. Hope that helps to answer that question. Hope it makes sense.
Okay, and Simon is saying understood. Thank you. All right, so it seems like no more questions. So I would approach this, and usually when I look at Chaikin, oh, there is one here. Actually, okay, I think, okay, Michael is like right into the point that I want to make. From Rami, should the point marked as selling climax in the chart be marked as the buying climax? So I think that I know the answer, but Franz, please go ahead.
Yes, I'm sorry. Sometimes I type a little bit quicker than I'm thinking.
Oh, I see. So this was just a
That
typo?
should be a BC. Yeah, that should be a
Okay.
BC.
Because I thought that maybe, Rami, you were referring to, I know that Anna Kulin in her book actually labels climactic actions the opposite the way how we do it. And her explanation is that the composite operator, the institutional money, is selling into the excitement of weak hands on the climactic run, so therefore this is a selling climax by institutions, which I kind of, and actually not kind of, which I disagree, because there are so many things here that could be discussed. Climactic action, in this case, buying, not selling, that's what's happening. So we are having a climax of buying wave, not a selling wave. So that's my kind of like primary argument there. All right.
And really the only thing that defines that is the change of character that occurs between May and June.
Mm-hmm. Okay.
Like you say, it's not a big volume signature.
So here is my take on Chaikin in the way how I kind of look at that. And I'll see if maybe we could include this into the November special. So November special is going to be all about momentum and volume. Those are the two things that actually precede relative strength. So some of my recent trades are more about that, where I'm trying to get pre-momentum and pre-relative strength. Why? Well, because there is a lot of premium that we are not getting if we are too late to the party, so to say. So maybe Chaikin could be discussed there as well, because as I look at this indicator, and we're going through all of these points, what I'm thinking here about is effort and the result. And I'm looking at how there is an expansion of liquidity in one direction, an expansion of liquidity in another direction, and then what the price is doing. And I'm thinking, like, with this expansion, what are we doing in terms of the price? And I'm keep comparing it. And I think this is a pretty useful way of using an indicator like this, because basically the indicator is showing effort, whereas the price is showing the result. So we have that effort-result relationship that we could use in our judgment. So for instance, Franz, and I'm just kind of like showing what I'm seeing. There is a move to the downside here, so supply is increasing by that picture, right? And demand is going down. Am I correct?
The way I'm interpreting it is that supply is increasing and demand is going down. Yeah, exactly.
Yeah. Yep. Okay. So we have more selling than buying, right?
Right.
So
yeah, that's the way I interpret it.
Right. So on a very simplistic level, if this is happening and the price is making a higher high and a higher low, to me that kind of says that there is a pressure to the downside, that is increasing over demand, but yet the result to the downside is somewhat limited. So I'm kind of interpreting this as a bullish scenario. So that is kind of thought number one. The second thought that I had when I was looking at this latest reading on the indicator, we had somewhat, I don't know, maybe a somewhat similar situation right here where it's going down. So again, supply is increasing, demand is decreasing. And we are actually making multiple higher highs on the divergence with that indicator. So kind of reminiscent of what we're having right now. We're having higher highs, higher lows, higher highs, higher lows, and then kind of the same is happening. And then obviously, you know, we see what happens after that. That's like this big speculative wave that we have in 2017. So I wonder, what if we are seeing kind of like an interim rotation at this juncture that leads the indicator to look like this. But because of the result of what we see, you know, it might basically suggest that we might actually have a rally. So that's just maybe a slightly different take on how to interpret this. Do you have any thoughts on this, Franz?
Well, the only, I guess, the 2017 period was definitely in an uptrend, and I guess you could make the same case though. You could say that potentially we're in an uptrend here. Yeah.
Well, we are in an uptrend, right? So higher highs, higher lows.
Mm-hmm. And if
we
we've
would
actually
have had
broken
a rally, and Franz, hold on a second. I think this is a very important point. Are we in the uptrend, guys, or are we not in the uptrend? In the intermediate time frame, we are in the uptrend. Off the significant low, we've been going up. In the more longer term picture, we're still in the consolidation right here.
Mm-hmm.
I just want to make this point, Franz.
Mm-hmm. Totally agree.
Okay, so well, let's observe how it's going to unfold. So I would pay attention to this type of scenarios where, and actually would kind of like explore this a little bit more. Right here, as we were doing this, also another valuable thing is what I do with a lot of the indicators is I look at a big sample of history here. And every time I see that this indicator basically is showing also the forces, the momentum. So what I'm seeing here in 2009, 10, and 11, and this is what we will be talking about in December session. So maybe this is where I could, you know, use this indicator to show the institutional buying. So this whole wave right here into 2011 was an institutional momentum buying of the market that, you know, lost so much value. They brought up the market back into the area where they had it before. And then after that, we want to look at the, you know, somewhat what I call is sustainability of the trend. Could we sustain this trend to continue or longer? So the money flow is actually very valuable here because every time we have some kind of cyclical low, we want to check on, does momentum emerge? Is there a force behind the next point where sustainability is at question? So this low was at, you know, questioning that sustainability of the trend, and then momentum comes, so we know we are confirming that the long-term trend is still sustainable. And then another momentum drive here. And then we see even through this area right here that momentum is increasing. And then going into 2015, this is where both price is stalling and then momentum is starting to go down. So this is where we could anticipate a more meaningful reaction, probably on par with what we had in 11 and 10. With the same analysis here, we could see the momentum coming back into the market, and they are still buying, a lot of buying. And then this momentum goes down, and this is where we could have anticipated this reaction. And then what happens? This latest rally has that institutional momentum and flow of money. So, and we are probably, I'm just thinking out loud here, friends. This is a slow of momentum, but we are not giving up, these positions. So maybe it slightly reminds me a little bit of this situation.
Mm-hmm.
Maybe somewhere also here, kind of like waiting. Momentum definitely is down. The flow is down. It's an indecision point, but the price does not go lower. So that's what catching my eye on this thing. And then we could just double check this, because we have so many price cycles here. Look at how they're buying value first. We've talked about this in WTC, and I brought this material to you guys last week. Then momentum buy, this whole thing. Then they're just doing nothing. While they're doing nothing, the market is just very elastic. And then another wave of buying, and it sustains that trend until we have this deterioration, and then this is the downtrend. I'll show you a little bit more during the December special. This is going to be interesting because we're going to talk about long-term campaigns and how we swing trade around those. Very exciting material. But Franz, this is really great. I would like you, to bring this back to us at some point, maybe like in a month or two. Would that be okay?
Sure.
For us just to see and to develop, this material a little bit more. I definitely see a lot of value, and it's just been a great presentation. Let's just, explore more on this material.
Very good. Thanks a lot, and thanks for your analysis, Roman.
Absolutely.
It's something that I see, and I don't totally know how to interpret it. So, getting more eyes, especially yours on it's a big help.
Listen, I'm just showing what I'm seeing and how I'm interpreting, but it doesn't mean that I'm correct. Mm-hmm. So that's why I want you to come back with this material so that we would see what's going to happen, and we would post-analyze this. But in December, I think that we could, explore this more, and I can show some of the tools here with this as well. So thank you so much, Franz, and
thank you.
Let's just jump to the next segment. Let me see, there was a comment here. Okay, I think that we're done with this. All right, great. All right, guys. Now let's talk about the homework. I ask you to read 2 articles, Outliers and the Mundanity of Excellence. Please say yes, and there is no punishment if you have not read this, so please say yes if you've read it, if you read those pieces. Okay, great, yes. People are saying yes. So really quickly, just one volunteer, and we'll go through this like in 5 minutes. I'm just going to ask you a series of questions. Just say yes, and I'll unmute you. Anyone? Okay, let's go with Rick. Hi, Rick. How you doing?
Hello?
Yeah. How you doing?
Hello.
Yes.
I'm doing good.
Yeah, I can hear you. Well, Rick, I want
to
quickly ask you some questions about your trading and your education around trading. So I'm gonna just keep asking you questions, and just approximate the numbers that you think that you might be spending on all of these activities. So for instance, I would like to ask you, how much time do you spend on our classes at Wyckoff Analytics. So let's say one class per week, maybe 2 classes per week, some homework. How many hours per week do you usually spend on education?
Oh, 6 hours.
6 hours. This is a really good number of hours to spend, because I'm thinking each day at least an hour, slightly less. So if you would do this consistently, for years and years and years, oh my gosh, this is going to be a really good strive to get to a really good place. Okay, well, what about a weekly selection process? So you're looking for your candidates, you're looking at the market, you're analyzing the charts. How many hours does this take? Approximately.
15.
15 hours. Wow, that's a lot. Okay, next thing. Let's any other activities that you would do, maybe like reading a book about trading, or is it under?
Yes, reading books.
I'm sorry?
Yes, definitely books.
Okay,
Definitely books.
books. Okay, so books. How many hours do we spend per week on that?
Three hours.
3 hours. Okay, great. Okay, so anything else trading related that actually develops your skill or increases your knowledge? Not looking at the screen, but maybe looking at the screen and analyzing. I would be imagining that this is either under education or selection, but anything else that we're missing here?
Yeah, I would probably say 2 hours on the trade journal.
Awesome. Trading journal.
Yes.
How long have you been doing this routine, Rick? For how long?
I'm finishing up my third year.
3rd year. Excellent. Okay, so what do we do here? We want to, this article about outliers, and this is from the book, from Malcolm Gladwell, talks about the 10,000 hours that it usually takes to master a skill, master a craft, or at least to become masterful at something to a certain level. And we are taking this as a basis and as an idea that we do need to practice. So sometimes I have people, when I talk about practicing trading, meaning practicing analysis, practicing execution on charts, going through the analysis, and then going through the post-analysis, they are saying that this is not meaningful because during actual trading, emotions are going to be swaying you in different directions. Completely disagree. I would rather be swayed emotionally with an array of analytical tools that I feel comfortable with, and at least be confident in my analysis, rather than to be swayed in my emotions when I don't have the knowledge and I don't have the system and I don't have the skill. So we need to practice. The question is how to practice, and obviously, this latest term, deliberate practice, and I wanted to bring you a couple of other articles that I've read just recently on that, and I probably will. The way how we practice is very important. So what I'm seeing here from Rick is that there is a routine for 3 years where there is a devotion to the craft, the devotion to advancement, progress, and so on and so forth. So let's calculate this really quickly. We have 26 hours. That's per week. 2 weeks a vacation, right? Maybe per year.
Sure.
So this brings us to 1,300 hours per year, and times 3, that's 3,900 hours that Rick has spent on trading education that would have a meaningful impact on the way how Rick trades, or the how the analysis or selection is happening. Was it helpful to be in this routine, by the way, Rick, for these 3 years?
Yes,
I mean, what has happened qualitatively? Did your trading improve? Rick, are you there?
Okay. Yes, my training has improved. 3 years ago, I got laid off from the oil industry, and I had been studying and reading for probably 20 years prior to that, with the goal that when I retired, I was going to trade. So I got started a little earlier than I anticipated, and so I've got a trading plan, I've got my system, and I'm just diligent. And during this education, of course, I came across the Wyckoff method and Wyckoff analytics, and man, I couldn't be more excited. So it has definitely paid off.
That's great, Rick. Such a great way of building a systematic approach to your trading, to the knowledge that you receive. So just very commendable. Thank you so much for sharing this with us. Okay, so
sure, thank you.
Okay, absolutely, Rick. Thank you. I'm gonna mute you now. So this is obviously one of the best examples that we could hear from our community, from students, on the practices that you guys are using for your preparation for trading. Rick is doing just tremendous job right here. So just this is awesome. I don't have so much time to devote to like my own education. I would love to have more time just for R&D. But what is important here is that this type of education, once you establish this routine, has to go through years and years and years. That's point number one. The second point is the way, how it should be happening. So it has to be very deliberate. And I think that the practicum, when we were creating it back then, 5 years ago or so, and I was talking to my staff, our conversations were about skill building, skill development. And obviously, I'm a little bit obsessive. I'm kind of realizing this about myself, obsessive with the details on the chart and so on and so forth. So it becomes a little bit more of exploration into the, where is the truth? What do we actually see? That's why, with Franz, I want to see what's going to happen. I want to see, how should we be interpreting, this type of structural points. So we have to be extremely deliberate in our practice. If you don't have a chance to log in as many hours as, let's say, Rick is logging in here, and you're working 9 to 5, you have to find the way, to have at least an hour or 2 or 3 per week, maybe put somewhere, throughout the whole week, where you're doing specific processes. For instance, the process of selection. You have to go through this, on the weekly basis. How do you get to your candidates? The process of education. What do you identify as your blind spots? And how do you actively go after about acquiring the knowledge, asking me or someone else, looking for that blind spot and answer to that blind spot in the literature somewhere, publications, and so on and so forth. And then maybe the third hour devoted to just studies of the market, studies of the charts. And if you could have those three things lined up for each week, and you just consistently do this over and over with the very deliberate practice, so methodically, slowly, understanding, and exploring a lot of the points there, then definitely the improvement will come. All right, so that's our point here. I always love to give the whole class the intention of how we're going to do things in this classroom. It's going to be slow, but it's going to be very deliberate. And with that, let's jump to the next module. We had the second assignment, which was the bias game. All right, so let's look at this. And I'm going to go quickly here, and then I'm going to give you the assignment for next week for the bias game. So we are going into the trading range from the uptrend. It looks like demand is very stable, supply is occasional. There is not a lot of big reactions that are happening on the way up. This was the largest, and we are anticipating maybe with this supply that maybe soon we're going to have more supply. As the price goes high, supply indeed is increasing, and we know that somebody is selling into the strength of the trend. And then obviously here on the change of character, we're seeing that supply is culminating, meaning that supply is in synchronicity with the result, or the increasing effort is in synchronicity with the result, and we're having the largest reaction, which means that we are going to go into a trading range. And here we are in this trading range. And it's just such a great concept, a change of character. I was just teaching it yesterday to the new WTC group. And it just, every time I teach this or I talk about change of character, it's so elegant and simplistic in its concept. And it just gives you so many different ideas and points about what the structure is going to be. It basically gives you an idea for a non-trading environment. That's number one. Secondly, right away, it identifies two important points for us: buying climax and automatic reaction, or automatic rally if we are in the accumulation. And it those define areas of resistance and support. So we know exactly where the price is going to spend the majority of the time. And we could expect that the price is just going to consolidate. It's going to have some rallies. It's going to have some reactions. There might be increase in volatility, decrease in volatility. And through all of those actions, we need to define what the bias is. We usually start with the bias being the same as on the previous trend. So this means that out of the uptrend, we are expecting a continuation and a reaccumulation. Our first task is just to see what kind of level of supply is coming in on the change of character itself in phase A. Is this a distributional supply, or is this just rotational supply? Usually distributional supply would have the characteristics of expansion, and that expansion would be quite different than what we've seen before. And I don't see this necessarily here. I see that there is a slight increase of the supply, but it's not as much as what we're seeing, in the area where there is some selling into the strength. I also don't see, and this is the second thing that we would be judging a change of character or the presence of the supply for the distributional characteristics or rotational characteristics. How does the price react to that supply? Does the reaction break the previous support? As we go down, would this spread drastically increase? Would we have gaps? How would the price react around the stopping point? Would the price react quickly out of that point, or would it just stay there and produce just more limited rally? And with all of those elements, it feels that a change of character still suggests that we are in the reaccumulation, and we are probably going through some kind of rotational pattern here in this particular stock. So some of the hands are giving up their position, and this is probably a value or contrarian investor. And then someone else is picking up this position, and because there is enough liquidity and other institutions are anticipating that maybe there's going to be another growth opportunity out of this trading range. So that exchange of shares, rotational exchange of shares between institutions, should not produce a lot of movement in the to the downside, because it's when the price moves to the downside, that's when we know that there is selling. There is selling. Here we're seeing selling, and then the price stabilized and stays kind of like in the same range. So what happens next? What's the next Wyckoff story here? Well, once they bought into this and rotated, so sellers, those institutional sellers, sold, and they became inactive. And the institutional buyers acquired the position, accumulated the position, and they became inactive. So therefore, when the two major participants have become inactive, what would we expect? We would expect that the volume would go down. It did. And then with that diminished volume characteristic, what is the price doing? It's actually going up. So that tells me that even though they are inactive, the price chooses to go up and not down. It means that supply has been observed in this area right here. And that's the major kind of premise here for this rally. We're calling this a weak hands rally just because weak hands participate in this rally. It's not that they are producing this rally. The composite operator, these two institutional types that rotated the shares between themselves, they are producing this rally by being inactive, but weak hands are just participating. We see the climactic end to that rally, suggesting that supply has come, and we're thinking that probably this is just, professional mean reversion trade that is being produced. But then when we see that this happens, that suggests that this initial supply had some kind of institutional signature as well. So they sold into the high. And we need to start thinking, is our bias changing? This is what France was alluding to, when I'm talking, guys, about different, and I was kind of like hoping to hear the phrase textures. Look at the texture of the uptrend. Look at the texture of the next rally. Somewhat similar, slight differences. If you can, if your eye could catch that, there is a little bit more volatility the way how the price moves, but yet it doesn't progress a lot to the upside, suggesting some kind of resistance. Then supply comes in, and here we're thinking, would there be a change of bias to the downside? That's the question that we are going to address after we see the emergence of this supply. Well, the price definitely goes down, supply emerges, and this is the highest supply, so we're instantly thinking, are we in the bearish bias? Okay, well, the answer to this question is in the result. What is the downward result that we see and that we have? Have we committed below the support? No. Have we closed in the lower part of the spread? No. Have we had only signs of supply and no demand? No. And it seems that there is some demand that came in, and they bought into the lows, into the value. So they saw this as a value, and it seems that this institutional buying, because of the volume signature, because how high it is somewhat reminiscent of what we had somewhere here, where we have a lot of buying even on the way down. So all of this is buying, 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 buying again. Then this is a sell. And then they are heavy buys again, right here. This is the value zone, so they want to buy in the value zone. We could see that further down here, here, all of this buying, you know, in support of the prices being in the value zone. And because it didn't close below the support level, that's what tells us that it's still a reaccumulation. And now they have bought here and they have bought here. So by this point, supply should start being exhausted. And we should see the confirmation of this exhaustion in two things. In the structure, we should be seeing higher highs, higher lows, or at least higher lows. And then in the volume or effort, we should see that supply is going down. Well, we definitely see that supply is diminishing. And then we see that, yes, indeed, we have higher lows throughout, not just one, two, three. We don't have a higher high, but we are in the apex formation. An apex formation does not supposed to have a higher high until a breakout. So with all of that, and with the lowering of volatility in this area right here, we're thinking that the bias here is up. Now, what I want you guys to do with this exercise, and it's very important, so please, for your records, I want you to count how many exercises, bias exercises we went through, and how many of them you guessed correctly, and how many of them you guessed incorrectly. And then we'll talk about those numbers as well. We did this with the previous cycle, and it was really helpful for students and myself as well, you know, from teaching perspective, you know, to see, you know, where we're going with this. There's going to be some struggle here when you're going to look at the numbers, and I want you to go through this struggle. The key is just to let yourself know where you are. This is a really great measurement, this bias game, on the knowledge that you have on the price and volume relationship. So it basically very quickly shows you your blind spots. So please use this exercise to improve. All right, and here we have McDonald's, and I think this is the last bar that we had here. You guys can go to our Twitter. This has been tweeted last week, so as you've noticed, I'm giving you the exercises that are coming up next week or this week rather, as a bias exercise. I think that's how it's going to work. All right, so please feel free to read the whole Wyckoff story and to go through this analysis at your own time. And this is the next chart that I want you to go through. So as usual, print it out, analyze it, and then just send me your chart with the bias and with the explanations. All right, great. Where are we with time? 4 o'clock. Okay, awesome. Let's look at the anatomy of the trade. Yeah, so there is a big development here, ACB, Aurora Cannabis. When we started our class a week ago, we were somewhere here. And since then, there was an earnings report. I believe it was last Wednesday, I think, last Wednesday, or yeah, it was Wednesday, yeah. So this is Thursday, and this is Wednesday, so we were right here. Yes, okay. So the trade just did not work out, and I kind of closed the probe. I still have other positions in cannabis industry, so one of my positions that actually is working right now is in canopy growth. I know that a lot of you are following a lot of fundamental news on these stocks and the group in general. This is not the group that is showing relative strength by any means, and I had a lot of comments from you guys on that. So it's great that you're noticing this. Yet we are looking for a different trade. We are looking for the trade that we are not going to pick up somewhere here in the middle of the range. I was looking for the trade to pick up somewhere at the bottom of the range of the long-term formation for a campaign. So from that perspective, let's quickly go through the analysis of this anyway, because it's important to understand the logic of even this entry and just to post-analyze this. And I want you to be very critical of my trade here. So if you have any suggestions or comments, please feel free to write them down, and I'll possibly respond to them. Okay, so as we are having a very speculative run here, a very quick distribution, and please note how short this distribution is. There is an urgency to distribute. So they are distributing into the climactic run, then sell-in, and that produces small reaction, then sell-in produces larger reaction, then sell-in again into the upthrust and sell-in again to the downside. So this is the most volatile period that we see after the uptrend, and then after that they are done. We see this texture change right away in the volume signature and in the price as well. So what does it tell us? The speculators that were present on the way up, they sold, and I'm talking about institutional speculators, they sold in this area right here. And because they were the sizable position players, then look at how the texture of the spread is changed. All of the attempts to go up, those are just hopes of weak hands market participants that after a big speculative run that they might not have anticipated and did not participate in, they are picking up some value here, and they are being pulled in on all of these reversals and momentum, short-term continuation momentum. So there is some selling that we could see from the volume signature, and it's just institutions, so pros are, shorting into the rallies. Then suddenly a big pickup, so something is going on, so that attracts our attention. But at the same time, obviously, volatility shows still some problems. That volatility acts the same way. Look at how texture repeats itself. A lot of volatility in this area, and then slowly down. A lot of volatility first, and then slowly down. So you always want to invest when, get into the position when volatility diminishes. Because when volatility diminishes after, such a strong volatility to the downside, that suggests that we are done with selling. So we just need some kind of confirmation of the possible reversal and a possible rally, right? So what would be that confirmation out of that diminished volatility? So here is a diminished volatility, and here is diminished volatility. Okay, well, here is our first momentum rally. And this is what we want to look for as the rally starts. We want to get on this rally as soon as possible. So here is that rally again. We will have a second chance here to enter here, 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 and then to have at least another rally. So most recent reaction has somewhat of the same but slightly different characteristics. We have a very laborious move to the downside. So from some supply that came in at the top, we're definitely diminishing supply signature and volume signature in general. And then this is what got me in. So the beginning of the rally. And that's what kind of attracted my attention throughout the whole group, not just in the Aurora, but actually the whole group kind of like looked the same. A question here from Dmitry, why enter right before earnings? This is a great question, and it's also a great comment in terms of the trading. And so was thinking, Dmitry, that anticipating a better result on earnings, or at least a better result in terms of how the analysis worked out, going into that earnings report. So seeing that there is not a lot of selling, anticipating that maybe there's going to be a more favorable reaction before earnings, and we're going to have some kind of gap like we had a gap right here. So that was the thought. And just happened in the opposite way. So the only thing that I had to do is for this specific position just to get out of the position. And I'm still thinking that we're probably going into this area, and I wonder what's going to happen here, because I see that in our Canada stocks there is an attempt to accumulate. So maybe a false start could be, but definitely the goal was to come in closer to the low, not on the momentum itself. And not to be late, especially, if we want to leverage this position. Okay, so what else? Okay, another question, actually a couple. When analyzing the tape, if you see an earnings report, but you see a valid point of entry, is it part of the methodology to enter and take a chance with earnings? Yes, a good question. So, so here is my rule, Dmitry, on that. If we are in the reaccumulation, in general, I would definitely would take the position if I'm identifying, let's say, potential phase C here. And this is a much more higher probability. Let's say if the earnings event is somewhere here, going into phase D, then there is a much higher probability that there's going to be a more favorable reaction to earnings. If we are in the accumulation, and this is really, this move is done, and if we're thinking that this is reaccumulation, this probably looks more like a full accumulation, because new participants are coming, into this market in this area right here. So it's being accumulated in its own way. So here, my preference would be, to be more cautious about earnings, because there is definitely more structural problems in this type of accumulation than in the reaccumulation. So therefore, the answer to your question is what does methodology kind of like requires? Yeah, that was exactly what I said, and then I'm just not fully following the plan here in hopes that it's going to actually gap up on earnings. Would an option trade be more appropriate before an earning announcement? It actually, Rami, was an option trade. Probably you are a month early from Rick, yes. So that's exactly what happened. So it's, as I'm post-analyzing a lot of my trades this year, I'm noticing, and even from last year as well, I'm a little bit early. And the reason why I think is because I'm seeing changes of behavior. So for instance, this is a change of behavior because at initially here we have the highest volume signature. Obviously, this is a lot of selling here, but we don't see that type of volume signature anywhere else. So there is more institutional participation at this point in this company. So they have to, and they are not necessarily getting out as the price is going down, unless this was just a speculative run right there, which we could say that it definitely was. So yeah, so sometimes I'm a little bit early, but that's fine because I'm usually establishing a probe which is just about 20 basis points of my regular position. So it really is not a huge loss to me, especially if I'm taking it much faster than where the stop loss actually is. So that's how it just happened this way, and nothing kind of like that we can do about this. All right, what else? Okay, how do you determine options, expiration, and strike? So I'm thinking about the duration of the potential move. So I look at the history of how quickly moves could happen, and therefore I'm projecting, somewhat of a scenario where I'm saying that if this type of move would happen, what is kind of like the duration that I could expect. So I'm thinking about the duration of the uptrend. And then based on this is going to be my expiration. And then the same way, only vertically, I'm thinking about where the price would go. And from here, if I'm thinking that it's going to go to around $12, maybe like as a sign of strength or an upthrust type of rally, and both are actually fine for this trade. I wouldn't care to have an upthrust rally either. Why wouldn't I, right? So usually those are extremely fast. So if I'm thinking that my target is 12, I probably would be accumulating options between 750 and 950. I want my options to be somewhat slightly far away, but yet have some run into the money into my target. So that's usually my direction of play on options. All right, with this trade is done. So what's exciting about this is that I want to play a much deeper game with you guys, because WMD and WTC, those are, specialty classes, and I can't do this for one reason or another, but with you I can, and we're going to experiment here. So I want you within the next 5 minutes to choose the stock that we would have bought today at the close, and then we are going to follow it as a group, and I want you as a group to vote on that stock. So why don't you just right away tell me your candidates, and we'll analyze those and we'll make some kind of decision, or it will become a homework. So what do you guys think? What kind of stocks are you looking at? Anybody? Any symbols? Anything that we can look at? Gold, okay. Yes, an interesting candidate. So what kind of trade? Let's just determine what kind of trade we are looking for, right? So we are looking for the trade that would last our whole semester. We are not looking for the trade that would last, a week or two, right? So obviously ACB, did not last long, but hopefully something else. So, okay, one candidate gold, so we can vote on that. Second candidate, Pulte Group, so that's in the home construction. I think a very sound selection here. All right. technology, Prospector, interesting. Well, this is kind of like more maybe than speculative because this is an IPO. Okay, what else, guys? Let me write it down, all of that. SunPower had a reversal today. Looks good. Hess. Also interesting. And in the interesting sector. Okay. And okay. Spotify. Oh no, not Spotify. Yeah, Spotify. Okay. Yeah, very interesting. This is kind of like, maybe it's just the challenge of it, you know, that just attracts me to these candidates lately. It's just to figure out where is that phase C. And Dmitry here is saying Spotify possible phase C happening now. Yeah, very interesting. Okay, I think this is enough. So we have 1, 2, 3, 4, 5, 6. Okay, one more from Larry. Okay, so target. All right, great. So